Meet John. Like millions of other Americans, John worked hard all of his life to support his wife Susie and their son Paul. He wanted to give them the best lifestyle possible. Now, along the way, John heard about a terrific government-approved savings plan called an IRA, the Individual Retirement Account. John was told that the IRA was a great way for him to save money for retirement and get a nice tax break on his contribution every single year. So like millions of other Americans, John began to take advantage of this plan, saving on taxes today and deferring them into the future when he thought his tax bracket would be much lower. Now, through the years, John's IRA nest egg grew and grew. John and Susie were very prudent with their finances, and upon retirement, they were proud to have their house paid for and no other significant debt. Additionally, John's company provided him with a sizable pension. This, combined with Social Security, provided John and Susie with more than enough income to live comfortably in retirement. Together, they decided that John's IRA would be earmarked as an inheritance for their son Paul. They were very excited at the thought of leaving a significant sum of $200,000 to their son. When John and Susie passed away, the $200,000 IRA was left to their son just as they had planned. Unfortunately, however, Paul was in for a big surprise. You see, taxes had never been paid on the $200,000 IRA, and Uncle Sam was standing at the door with his hand held out. Upon distribution to Paul, the IRA was fully taxed, not at John's tax rate, rather at Paul's tax rate. At that time, Paul had a good income and was already in a high tax bracket, and the $200,000 inheritance only pushed him higher. Now, after the taxes were calculated, he lost 35% of his inheritance to Uncle Sam, leaving him with only $130,000. Paul thought he had been robbed. Paul was upset and mentioned this situation to his friend Dave, who happened to be an IRA expert. Dave couldn't believe his ears. If only Paul would have discussed this with him sooner, he could have shared a strategy for John and Susie that would have significantly increased Paul's inheritance and kept Uncle Sam out of his pocket. You see, Dave had knowledge of an IRS-approved solution to turn a tax nightmare into a tax-free inheritance. If John had used Dave's proven strategy, he and Susie could have left $310,000 income tax-free to Paul instead of only $130,000, a staggering difference of $180,000. Furthermore, John would have had living benefits available for emergencies such as home health care or nursing home expenses. If only he had known about this strategy sooner. Paul vowed that he would never leave his family in such a predicament and asked Dave to help him to set up a tax-free inheritance for his children. With a very simple application, Dave was able to bring peace of mind to his friend Paul by turning taxable into tax-free by using a little-known strategy which is sanctioned by the U.S. government. Your choice is simple. You can leave more to your family instead of giving it to Uncle Sam. If you'd like us to help you create a custom plan to eliminate massive taxation, eliminate downside market risk, and protect what you've earned from unscrupulous politicians and all other outsiders for free, then give us a call at 1-888-345-6674 to speak with a tax-free specialist, or you can simply enter your information and one of our professional planners will contact you promptly.